Hello, and welcome to Accounting News, a series dedicated to providing valuable insights for accountants and CPAs navigating the complex world of buying and selling their practice. Today's topic is on why private equity firms are buying up accounting firms and what you can expect if you sell to them. And to share their experience on this topic, we're honored to welcome an expert with 37 years experience in the field of owning, buying, and selling accounting practices, and the author of the book, The 7 Secrets for Selling Your Practice. His name is Bruce Clark, founder and CEO of New Clients Inc. Bruce, welcome to Accounting News.
Thanks, Brett. Appreciate being here.
It's our pleasure, Bruce. Now, on the topic of why private equity firms are buying up accounting firms, can you shed some light on why it's good news for accountants or CPAs that want to sell their practice?
Yeah, it's a very exciting development that started around 3 years ago. I was contacted by a client of mine from Michigan, a husband and wife team. The wife was a CPA. The husband he actually became the salesperson for the firm. We trained him on how to go out and get clients. And they went on to build in a 15-year period a $2 million practice. Long story short, he sold his firm to private equity. I was not involved in that sale. He called me afterwards and told me about this company. And he said, I think that you guys should talk to them because they want to buy the kind of firms that New Clients Incorporated has been building, over the past, many years. So I said, great. So we ended up setting up a Zoom meeting. I met the management of this particular PE buyer. And we closed our first deal, I think it was 4 months later, another NCI client in Harrisburg, Pennsylvania. And that sale went through for $5.5 million cash paid at closing. So it's a very exciting new process that's going on here. And for accountants who are, meet the criteria that these PE firms are looking, this is very exciting news.
Well, Bruce, I have to say that sounds extremely interesting. So let's say somebody wants to sell one of these firms. What do they typically look for in a practice, and what does it take to qualify?
Well, it's a very good question, and they are looking for the repetitive billing model. Okay, they like practices like my two clients that I just mentioned who sold to them. They like the small business market, monthly bookkeeping work, payroll, taxes, fine, business and personal. They're okay with that. What they do not want is audit and review because of the complexities necessary to process that work. And the legal requirements for them to buy a CPA firm make the deal much more complex. So they're really looking for the bookkeeping and tax practices. And at present, I now have 5 private equity buyers that I'm working with that are buying up practices, and many of them are my clients.
Wow. So considering you have all these private equity buyers ready to buy, if you will, how are they valuing a practice, and what kind of terms should a seller expect to receive? And more importantly, price.
Another great question, and I think a lot of the listeners will be surprised by the answer, but they're willing to pay very high multiples for the type of practice I just described to you. Of course, it comes back to profit margins, or what's known as EBITDA, the bottom line for that firm. They value practices a little differently than the traditional way the practices have been valued for as long as I've been in the business, which was a multiple of gross annual billing. They value practices based on a multiple of EBITDA, and they'll pay anywhere from 3 to 5 times EBITDA with 70 to 80% cash paid at closing. The balance of that money is typically tied to, I wouldn't call it an earnout, it's more a growth goal. They will set a growth goal because they want the owner to stay involved in the business. We can talk about that a little bit more, but if that growth goal is achieved, then that purchase price can go up significantly. As an example, in January, we just sold a practice who was not an NCI client, I might add, to one of the PE buyers I really like. I like their business model and what they're doing. That practice ended up selling for $9 million cash at closing with a $3 million kicker over the next 2 years. If he reaches certain growth goals, that business could end up being a $12 million purchase price.
Well, Bruce, I have to say that sounds incredible considering the potential of what a practice could be worth in the long run. So tell us a little bit more about the management aspect of things. How will these firms run these accounting practices?
Well, they don't want to come in and make changes. That's the first thing. Their mantra, if you will, is if it's not broke, don't go in and try to fix it. Clearly, if they're buying a particular practice or if they've expressed interest in doing that, they see value in the systems, the processes, and what that owner or owners has created. So the last thing they want to do is mess with the recipe for success. So they will typically ask the owner to stay on for 1 to 2 years. They will offer some sort of compensation for that. They want to keep the staff in place. They want to keep everything just as it is. Okay, location, name, they don't change any of that. Then their goal ultimately is maybe 2 years down the road to start to bring in ancillary services that the particular firm isn't offering, such as HR services. Maybe they're not doing payroll. Financial planning might be another one. So they want to add to what that owner has already created and build from there.
So just to clarify, Bruce, after closing the deal with a private equity buyer, what happens to the staff and the original owner of the practice?
Well, again, they want to keep you on. I'll go back to the sale we just did in out of Brooklyn, New York. They offered that seller a salary of $300,000 per year to stay on for 2 years to continue to run the practice. So they keep the staff there, they keep the owner there. They paid him a nice, salary. I mean, clearly not what he was making. He was making, his net margins were 65%. So he was pulling down on a $3.6 million practice. He was making $2.3 million per year. That's why they were willing to pay $9 million for that business at closing, with the $3 million kicker if the business grows over the ensuing 2 years. So there, like I said, the motto, don't fix it if it's not broke.
Absolutely. And I'm sure most viewers that are considering selling their practice would certainly appreciate that. So with that said, for the viewers that are considering private equity to buy their firm, what immediate advice would you give them?
Well, I would immediately ask them to go to my website at newclientsinc.com and download my free ebook, The 7 Secrets to Selling Your Practice on Your Terms. Or you could just pick up the phone and call me at 856-304-1035. I'm more than happy to answer any questions you may have. And let's see if the timing is right for you to enter the marketplace. Another thing I would like to point out is the PE firms do have benchmarks in terms of annualized billing. So your practice needs to be anywhere from $750,000 to $25 million a year in annual billing to qualify.
Well, Bruce, private equity certainly sounds like a winner for future practice sales, and we really appreciate your insight on that topic today. And moreover, we want to congratulate you with all your success with New Clients Inc.
Thanks, Brett. My pleasure being with you.
And for those viewers who want a free copy of the 7 Secrets for Selling Your Practice, be sure and go to newclientsinc.com or simply scan the code on the screen where you can get your free copy today. Well, that pretty much wraps up another segment of our accounting news series, wishing all accounting professionals the best in selling their practice. My name is Brett Duncan. Thanks for joining us.